Did you know that over 90% of self-made millionaires have built their wealth through real estate? That's right. While the stock market can be unpredictable, real estate has stood the test of time as a reliable path to financial freedom. If you've ever dreamed of making money while you sleep, then you're in the right place. In this video, we're going to explore the ins and outs of real estate investing. You'll learn practical strategies that anyone can implement, whether you're a complete beginner or looking to expand your portfolio. From understanding the key concepts of appreciation to actionable tips for buying your first rental property, we've got you covered. So, let's dive in and unlock the secrets to making money with real estate investments. Lesson 1. Understanding appreciation. When it comes to real estate, one of the most important concepts to grasp is appreciation. So, what exactly is appreciation? Simply put, it's the increase in the value of a property over time. Think of it as your home or investment property growing in value, much like a fine wine getting better with age. Let's break it down with a relatable example. Imagine your grandparents bought a charming little house back in 1955 for just $18,000. Fast forward to today, and that same house could be worth $500,000. That's what we call natural appreciation, and it happens due to factors like inflation, supply and demand, and even a little bit of good old American greed. But there's another type of appreciation you should know about: forced appreciation. This occurs when you actively improve a property to increase its value. For instance, if you buy a 2-bedroom house and renovate it into a 3-bedroom, you're not just making it more livable, you're also boosting its market value. Understanding these two types of appreciation is crucial because they can significantly impact your investment strategy. While natural appreciation is something you can't control, forced appreciation is where you can roll up your sleeves and make a difference. So, as you embark on your real estate journey, keep in mind that both types of appreciation can work in your favor. The more you know about how property values increase, the better equipped you'll be to make smart investment decisions. Lesson 2. Actionable guidelines for buying your first rental property. Now that you understand appreciation, let's talk about how to take that knowledge and turn it into action. Buying your first rental property can feel daunting, but with the right guidelines, you can navigate the process with confidence. Here are some actionable steps to get you started. 1. Start with a multifamily property. If possible, consider investing in a multifamily property. Why? Because having multiple units means you can collect rent from several tenants at once. This not only increases your cash flow, but also reduces the risk of losing income due to vacancies. If one unit is empty, you still have others bringing in money. 2. Aim for positive cash flow. Each unit should ideally provide you with at least $200 a month in positive cash flow after covering all expenses. This means you need to calculate your potential rental income and subtract your mortgage, taxes, insurance, and maintenance costs. If the numbers don't add up, it might be time to reconsider your options. 3. Look for properties below market value. Your goal should be to find properties that are purchasable for at least 80% of their value. This creates a margin of safety. If the market dips, you won't end up owing more than the property is worth. Motivated sellers often list their properties below market value, so keep an eye out for those opportunities. Lesson 3. Exploring rental strategies. Now that you have a solid understanding of how to buy your first rental property, let's dive into some effective rental strategies that can help you maximize your profits and build wealth over time. There are several methods to consider, but we'll focus on 3 of the most popular and effective strategies: the traditional method, house hacking, and the BRRRR method. 1. The traditional method. This is the classic approach to real estate investing. In this strategy, you save up for a down payment, typically around 20% of the property's total price. Once you find a property that meets your criteria, you purchase it, find reliable tenants, and use the positive cash flow to cover your mortgage and expenses. The key here is to be patient and allow your investment to grow over time. As your tenants pay down the mortgage, you build equity, and as the property appreciates, your wealth increases. 2. House hacking. This strategy is all about getting creative with your living situation. House hacking involves buying a property and renting out part of it to cover your mortgage costs. For example, you could buy a duplex, live in one unit, and rent out the other. This way, your tenants help pay your mortgage, allowing you to live for significantly less, or even for free. Many people also use platforms like Airbnb to rent out a room or a portion of their home as a short-term rental, generating extra income while still enjoying the benefits of homeownership. 3. The BRRRR method. This strategy stands for buy, rehab, rent, refinance, and repeat. It's a powerful approach that allows you to acquire multiple properties without needing a large amount of capital up front. Here's how it works. First, you buy a property that needs some work. Next, you renovate it to increase its value. That's the rehab part. Once the property is rented out and generating cash flow, you refinance it to pull out your initial investment. This allows you to use that capital to buy another property and repeat the process. If done correctly, this method can help you build a substantial real estate portfolio over time. Each of these strategies has its own advantages and can be tailored to fit your financial goals and risk tolerance. The key is to choose the one that aligns best with your situation and to stay informed about the market trends that can impact your investments. Lesson 4. Analyzing your first rental property. Now that you have a strategy in mind, it's time to analyze your potential rental property to ensure it's a smart investment. Here's a quick step-by-step guide. 1. Calculate total project cost. Determine how much the property will cost, including the purchase price, closing costs, and estimated repairs. For example, if the property costs $75,000, with closing costs of $2,500 and repairs of $17,250, your total project cost would be $94,750. 2. Assess financing needs. Figure out your down payment and loan amount. If you're putting down 20%, that's $15,000, leaving you with a loan of $60,000. 3. Estimate monthly income. Research rental prices in the area. If similar properties rent for $1,200 a month, that's your potential income. Calculate monthly expenses. List all expenses, including mortgage, insurance, taxes, and maintenance. If these total $922, you can now determine your cash flow. 5. Evaluate cash flow. Subtract your total expenses from your rental income. In this case, $1,200 income minus $922 expenses gives you a cash flow of $278 per month. By following these steps, you can confidently assess whether a property is a good investment and ensure it aligns with your financial goals. Conclusion. Congratulations! You've now equipped yourself with essential knowledge on how to make money with real estate investments. We've covered key concepts like appreciation, actionable guidelines for buying your first rental property, effective rental strategies, and how to analyze potential investments. Remember, real estate can be a powerful tool for building wealth, but it requires careful planning and informed decision-making. Whether you choose the traditional method, house hacking, or the BRRRR method, the most important thing is to take action and start your journey. As you move forward, keep learning and adapting to the market. Don't hesitate to seek advice from experienced investors and build a network of like-minded individuals. Now it's your turn. What steps will you take next in your real estate journey? Share your thoughts and experiences in the comments below. If you found this video helpful, don't forget to like and subscribe for more insights on building wealth through real estate. Thank you for watching.